Hello traders, my name is Thomas. Welcome to the Tao Academy. As promised, that when we reach 100 subscribers on our channel, we'll be doing some educational videos. Hopefully on a weekly basis, we're going to be releasing some educational videos for us to improve our trading. Today, we'll learn how to apply trade with Tao signals. That is our signal service that most of us have been enjoying on Trade with Tao channel. In this lesson, I'll be teaching you on the understanding of price, how to measure the change in price. For example, we'll be looking at pips and pipettes, and then our entry types. Then, most importantly, we're going to look at money management, and then lastly, I'll be giving some recommendation. To understand this, let's look at the charts that can explain to us what is price, because the understanding of price and how to measure them will help you to enter the signal correctly, taking the appropriate risk management, and then you can be as profitable as we are and as so many members has been. I will not assume that people in this channel are professional traders, so I will try my best to explain a lot of things in details, and if you're a professional, please wait till the end or continue to stay with me on this video, then you pick up one or two things. Remember, we are students always. I want us to look at the chart here. This is a chart of AUD USD 5 minute. It's not the time frame that matters, but what I'm about to explain to us. Right here on this side of the chart are price. Right below here we have time. As price moves up and down, these prices changes. So if I move my crosshair across, you can see as I'm moving down, look to the left, you will see the price is reducing. And as I move to the upside, you can see the price on my left hand side is increasing. It doesn't matter to us whether price is reducing or increasing. What matters is, say for example, based on my analysis, I feel I should be buying here. I'm going to use an indicator here just to illustrate this. So when I click, you will see what it's telling me is that my entry price is here. And based on the way we calculate our stop loss in a mathematical way, our stop loss will be here and our take profit will be here. These particular indicators have shown us what the price of stop loss is, where we enter the trade at the close of this candle, and the price, okay, for target take profit. So now that we understand what price is, it's important that we learn the change in price. Okay, what is change in price? The unit of measuring change in price is called pips, which means as price move up and down, the difference in, for example, our entry price and our stop loss price is referred to as pips, because the knowledge of knowing what pips are and how to know the stop loss, which is the change in price between the entry and the stop loss in terms of pips, will allow you calculate your loss size correctly. So now let's jump back and I will explain in more details. Now that we're back on our whiteboard, let's look at this together. Let's discuss the change in price. Let's say, for example, let's assume that we'll have a stop loss price, which means, what do I mean by stop loss? Say for example, remember I told you, let's look at an example of this. Price is here, time is here. Okay, so let's assume that the chart is moving up and down, and then at this point we decided to buy. So this point here is our entry point. So let's assume the price at which we want to enter the trade at this point is 0.6702. And when you enter a trade at this point, what you are predicting or what you're anticipating that the price is going to go up. So in trading, what we expect you to do is to protect your account by making sure that you have a stop loss in the opposite direction. So this is our stop loss, which means if price is going up, fine. But if price decided to go the other way, we want the market to take us out at a certain price. So let's assume that the price we want the market to take us out will be 0.66921. Okay. If you notice, this price is lower than this price because I'm predicting I want to buy, which means I'm predicting that the price is going to go up. But at the same time, I want to make sure I protect my account in case the price is not going my direction. I want to be taken out at this price level. And in case price goes to my direction, I want to take profit. So let's say this is TP on this line. This is where I'm targeting. So my take profit will be, say for example, 0.67117. Okay, you can see this price is even higher than this price right here. Okay, so now someone might ask you, what is my stop loss in terms of pips? Which means the difference between these two prices, okay, will be my stop loss number. Now I want to show you how to measure these changes. Okay, remember this, since this price here is higher than this price here, just simple arithmetic. All I need to do is 0.67002, right, minus 0.66921. Always remember this. There are pips, there are pipette. In trading, when you have 5 digits like this, okay, these last 2 digits, these 2 and 1, are referred to as pipette, which means they are fraction, they are not whole numbers. So if I do this, before I calculate this, I'll put point, okay, because it's not a full number, is 1/10. Okay, so what that means is that 1 minus 2 will be 0.1. Okay, 2 minus 0, like we do in arithmetic, I put 1 here from here, and that will become 8. Okay, and because I took from here, this will be 0, this will be 0. So at the end of the day, what we have is 8.1 pips. Okay, this is how we know that our stop loss in terms of pips is 8.1 pips. Let's look at another example. Okay, let's assume that we want to calculate our stop loss. Let's say, for example, our entry price is 0.67276. Okay, and let's assume that our stop loss is 0.67075. What then is our stop loss in terms of pips? The same thing we did the other time. Remember, the 5th digit, this last digit here, are pipette. So I'm going to put point. 5 minus 6, that'll be 1. Sorry, 6 minus 5, that'll be 1. And then by the time I calculate this, what this will give me is 7 minus 7, that's 0. And we have about 20.1 pips. So my stop loss in terms of pips is 20.1. Okay, now let's discuss the third thing on our agenda, which is our entry type. Anytime Trade with Tao send a signal out, our entry time is instant market execution, or what some people call market execution. What that means is that as soon as you get the signal, when they say buy or sell, just click buy or sell after you must have entered your position size or your lot size. Which will lead me to the number 4 items on our list, money management. Now, Trade with Tao, as must have noticed in our report, we risk 1% per trade, and we usually enter 2 positions. So if you put 1% on the first position and 1% on the second position, in total you are risking 2%. Please note, it is our recommendation that you risk 1%. You can risk a maximum of 1% by risking the 0.5% on the first position and 0.5% on the second position. The reason why we risk 1% on each of the positions is because we trade only one pair, AUD/USD. But as we unveil more of our services in the future and unveil more pairs, that might change. Please note, do not risk more than 1% per position per time, and do not enter multiple positions other than 2 positions. This is very important because in trading, you will not win every trade. One thing you must have learned from us is that it doesn't matter that we risk 1%, we can still make a lot of profit. In the past 2 weeks, especially last week, as you must have seen the report, that we won a total of over 84% in 1 week. So why risk too much? Risk 1% for you to protect and keep your account very safe. How to do this is what I'm going to explain next. Let's take, for example, that your capital is $1,000, and if your risk is 1%, 1% means this is how much you will lose out of $1,000. At 1% of $1,000 is 1 over 100 multiplied by 1,000. This is $10. Which means if you take, say for example, buy AUD/USD trade, you are only permitted to lose $10 if you do not win the trade. This is very interesting. What this means is that if you lose $10, your account will still have more money to trade with. Do not risk more than 1%. Let's take an example. Let's assume that your stop loss is 7 pips. Therefore, we want to calculate what our loss size will be. But before we do that, we want to first understand what is our pip value. What is the value of 1 pip? Therefore, our pip value will equal to your risk divided by your stop loss. In this case, our risk is $10 divided by our stop loss, which is 7 pips. By the time you do this, you will get $1.43. What this means is that the value of 1 pip is $1.4. To know your lot size, or what I call position size. That will be your pip value divided by 10. That is 1.43 divided by 10. And this will give you 0.14. This right here is your lot size or position size. This is what you will enter in your lot size or position size to be able to execute this trade, and make sure that you do not lose more than $10. If you lose this particular trade, you will only lose $10. Please note, you may need to calculate different p-value or different lot size for different account size. Let's look at the same example, but this time around, let's look at a different capital. Let's look at somebody that has a capital of $500. For this person, 1% risk, 1% risk is $5. Therefore, pip value is risk divided by stop loss, which is $5 divided by 7. And this will give us 0.71. Therefore, the lot size that this particular person will enter will be pip value divided by 10, which is the standard lot. That is 0.71 divided by 10. And this will give us 0.07. So for this particular trader, he will enter 0.7 in his own trade. Please let me repeat this again. Do not risk more than 1% of your account. Lastly, I'll be giving us a particular recommendation. Even though I have taught us how to calculate our lot size, some people might not be able to calculate this lot size as quickly as possible. So this is my recommendation. Let's say, for example, you have a capital of $500. Our average stop loss in terms of pips is 7 pips. So use our average stop loss 7 pips to calculate ahead of time what your lot size should be. For example, here we're using a lot size of 0.07. My recommendation would be that use 0.07 for a week. That is 5 trading days. As your account size increases, recalculate your position size again at the beginning of the week. Say, for example, if your account grow from $500 to $1,000, therefore, you need to calculate a new lot size for the week. And you will repeat this over and over again. Please note, in your trading, you might gain more or gain less depending on where our stop loss is sitting. But this will help you execute the trade faster. If you have any question, please do not hesitate to ask in the discussion forum. If you like this video, please give us a thumbs up and share with your friends. Thank you. We look forward to a greater trading week ahead. Bye.